What's going on, everybody? Welcome back to the channel, and in today's video I'm going to be breaking down a huge play that we took today and how I made over $10,000 trading the stock market in one simple trade. I always emphasize on this channel that trading less than nice can mean more money. Too many people always ask me, Antonio, how many alerts do you call a day? How many plays can you take a day? I want to take all these plays, and I'm telling you guys, the quality is always more. Sometimes I take one trade a day, sometimes I take 2, 3, usually rarely more than 4 or 5 on a really busy day. But typically I'm somewhere between 2 to 3 trades a day, because quality means better. I have a good friend of mine, let me tell you guys a story. I have a good friend of mine that trades about once or twice every month. You'll be thinking, wow, this guy does not make a lot of money. Well, let me tell you, he probably makes more money than me. Because this one trade is usually $400,000 gain, $500,000 gain, even 1 to 2 million. If something is not an A++ setup and is very particular about it, he will not take that trade. So if you want to learn about the stock market, crypto market, guys, as always, make sure you hit the like, comment below, subscribe below, and let me break down to you how you can take similar trades and some mistakes that I say beginners always making in stock market. If you're not following my Instagram page, make sure you go follow it. I broke those down quickly on there, but I'm going more detail about it into this video still. So let's jump straight into the charts and first break down the trade that I took today. Here we have it, guys. This was the trade that I took today, and it was S&P 500, so ticker symbol SPY. Puts. These were alerted in our Discord, and what you might see in this alert, as I will show on screen, is I said enter half position. What exactly do I mean by that? It is a theory that I not really spoken too much about it unless you're in the masterclass. If you're not in the masterclass, I reveal some of the secrets. Is that when I have a trade idea, sometimes I like to get in at first entry, so it means I enter half my position and then I wait for price to potentially retest a major key level and then enter the rest of the position, rather than just jumping straight into one, right? Because if my overall idea is correct, I might get a better entry and stick to my overall thesis. So my thesis this morning was, right, we got the market open, which was right here, right? This is the market open of around 9:30 EST. My thesis was that more than likely we were going to have a bearish day today for many different reasons. One being the day prior was very weak and we closed right below this level, which was 48.45 or 8.5. This major key level that I was watching, right? And then we made a new low. So right, you have this higher low, you made this high, and now you made a lower high, breaking what we call a charge, which is a change or corrector. This means that you broke the pattern that was uptrending pattern, right? You broke and you broke below. You could also probably draw a trend line here, as you guys can see this uptrending trend line being broken, potentially causing a sell-off, right? So we open up right around 9:30 and we go in the next day. So here we are, 9:30 opens up and I see the market kind of showing signs of weakness, but I enter around this 9:40 candle on half a position because I think there's a chance that we probably test the pre-market high levels, which would be right around 8.5, as well as this major key level, guys, right? If you can see this is a major key level I just mentioned. I think we probably test that wick above, grab that sell side liquidity, which is on this top side right here, and then bring it back down. And guess what happened, guys? It exactly happened. That it was all called out play by play, step by step in our Discord as well. Kept everybody in the loop, make sure everybody knew what was going on. Also, you could say that here is a really small order block from the pre-market. It's something also a few different types of confluences all together looking for that retracement. So then when price hits 48.7, right, and this was my secondary entry where we got literally the top, look at this, hit 48.7 exactly with a stop loss of about 8.8. We took those puts and we wrote them here with our average entry all the way down. Our exit was right around 407, and then 406 it hits as low as 406 on the SPY, being a really beautiful 1 to 3.5 risk reward. Actually probably a little better than that because our entry was kind of like that, so it was really 1 to 4. Our place hit over 100% on the runners, and it was a great trade. And it was one ad, two ads, something that you might see me do a couple times. It was one ad right here, and then as I get my retest of right where I want it, gives me this secondary ad, fixes up. So it was two ads, so it was a full position all the way, rode all the way to the down, and the plan was broken down. So my whole plan was pretty much to retest this previous support area, right? This charge. You might see me if you trade us in the chat room, you might see us talk about this, the charge, which means a change or corrector. It means the price went for an uptrend, potentially building a downtrend. Again, retest this major level and then goes lower, and guess what you did? Lower high, lower low. So you see this was uptrend, now you have the break of structure. Now, what is one mistake that I see beginners make far too often? It is chasing breakouts. So let me remove this drawing, clean this chart up a little bit. Let's say you saw this chart here, right? And then Actually, someone today in the chat room was saying, oh look, this looks like it's going to break to the upside. And exactly, let me break down why it didn't break to the upside, right? So you have this major levels. Let's say you have your levels around like this, and you see this push higher, you see this big green candle. You even may see, oh wow, this increasing volume compared to the other previous candle. You might be chasing the breakout up here. And chasing a breakout, guys, it will do you more harm than it will do you good. Do not ever chase a breakout. If you're a breakout trader, it does not work. The only period that ever probably worked was 2020. Very rarely those breakouts just continue to break out. If you're going to trade a breakout, you have two options. Option A, say this did break out, you want price to hold above the level, right? For me it was 408.8, that was for 8.6 to 48.8, that was the level, right? In this case it's 48.7 at the highest. So the price, you want this price to either go up, come down and retest, or at least to hold it. But when you see a wick below, don't be chasing these breakouts. If you do want to trade a breakout trade, you gotta wait for the retest. If this just goes straight up, right, and never gives you a retest, then who cares? You missed it, but it is what it is. You stuck to your rules, right? You were your risk reward long term. It's going to be good when you stick to your rules. Because if a good breakout, as you guys can see here, look, this broke down, right? On the opposite side, you broke the pre-market lows, right? You broke those lows, the support here that we had. Once you break down, you got this. You got the retest. You see this candles retesting and then going lower. That would have been your entry too short. Point is, do not chase freaking breakouts. I really hate when people are trading breakouts. It's a noob strategy. It's just builds FOMO. Wait for this retest and then go lower. Or if you don't want to wait for a retest, guys, taking a short position when people might be thinking it's a breakout. Now that's more risky, and not everybody can do it, and it can get you burned if you don't stick to it. If you do not do it right, it's take a short position here the way I did. If you have your supply and demand, your support resistance level drawn out like I did, as soon as you hit the level, enter, right? You can enter, maybe not enter the full position, maybe enter a quarter of a position, and then once you get a confirmation candle, right? This would have been probably in a smaller time frame. You would have got this confirmation candle, add to your position, or look for another retest eventually. Here in this case, would be that 5-minute fair value gap fill that we just spoke about. Right, and then look for lower. So that's something that I want to make sure that you guys understand is stop chasing these breakouts. They're going to do you more harm than good. Stick to your fundamentals, stick to your rules. Even if you do chase breakouts, make sure you do them correctly by limiting your risk to reward, understanding where you should be putting your stop loss, understanding, waiting for that bounce, and have those major levels drawn out. At the end of the day, like guys, these entries are on the smaller time frames. The major levels I had drawn out was on a 15 to hourly time frame, right? Just looking for this charge, looking for the overall trend, reversing from a major uptrend to either a small retracement down or potentially a new downtrend building, correct? That's the two things I'll be looking for. And on those major time frames, that's where you look for some of those things like those golden pockets. You guys can see if you draw a golden pocket here from the lows, you can see that this is where we bounced. Other than that, guys, I hope you enjoyed this video. I hope this video is educational for you. Hope you understood why was my mindset going into that trade and what I was risking, what my reward was for that risk. And if you like more educational video, make sure you hit the link down below. Make sure you subscribe, and other than that, peace.